Hey everybody, welcome to Trading Capital Exclusive Analysis. Today is currently November 6th. As we dive right into the markets, there's quite a few things to discuss. We're going to start with the major indices, the currency pairs, and the yield market. Obviously, there's some individual stocks that I could touch base on because there's a lot of interesting trade setups. But let's look at the S&P 500, the SPY ETF. First things first, look at this retrace back to the neckline. So we're all obviously aware that we triggered this beautiful head and shoulders pattern on the SPY ETF. The downside, a quick measurement, from the high to the low. This was your break point with a bearish gap. So it's a really good area to trade against. But that downside takes you to about 406. And you can say that we almost hit that level to a T, a couple dollars shy, being the fact that we touched a low of around 409.40 on the chart. So the SPY has had a beautiful V-shaped recovery right into resistance. Being the fact that you've had this parabolic short-term move right into the retrace of the neckline leads me to think that we start seeing a pullback here. Often market makers would like to just consolidate and distribute at this area, but this is a very big move that it needs to digest. You need at least a couple weeks of bullish consolidation to move through this level. I would be very, very shocked and hard pressed to think the markets are going to continue to grind through this level. Not saying they can't, but they need some consolidation. So right now, this is a good risk to reward on the short side of the market, in my opinion. But again, the SPY right now is at this neckline. If it gets rejected, expect a retrace of this move at least 50%, and that would be a beautiful scenario. So if you threw up a fib from this high to this low, and you've retraced 50% of it, that takes you to around 423 on the charts. There's a beautiful gap fill that it could fill around 422. And if you got that down move on the actual SPY ETF where you had this move down, you could be creating a little bit of an inverse head and shoulder. So if you had a down move, up move, then you'd have this left shoulder, this head, this right move. So I'm expecting a little bit of a retrace to the lower side of the market here. And a couple of other reasons why I expect a retrace. If you look at the QQQ and DX, whichever chart you want to pull up, we'll do the Qs just to put it in perspective. Look at this V-shaped move. Boom. Right into this down sloping trend line. Now, there's a lot of FinTwit people out there saying that this is a massive, massive cup and handle formation or a weekly bull flag pattern. They are right, but it has not triggered yet. So until it triggers and we actually get a weekly close above this key trend line, that's when you can really only start to look more bullish. But again, just because you get a weekly close above this trend line doesn't mean that this flag pattern is going to break out to new all-time highs. But being the fact that we are hitting this massive resistance, I do think that the markets pull back. And just to put things into perspective, if you do a measured move calculation, so let's take our price range tool, take it from this low in August 18th, measuring it all the way up to the high there, you had about a 7.5% move from the low to the high into that resistance. Is about a $26, $27 move. You take that same measured move, okay, and you measure it up here. Basically, you've almost had a $27 move, 8% move. Call it 7.5. So very, very close in terms of its measured move status. It has completed a little bit of a wave count here into this resistance. And right now, what's different about this move versus this move is that this move has just happened, this most recent move has just happened that much more quickly, and there was no consolidation chop here. So you had a 1, 2, 3-day pullback in this move, whereas this one you just had a straight parabolic rise right into the same resistance point. So again, everything's probability based. The probability states that this should pull back. I would love to see this gap fill lower to the downside before you can start looking for a little bit of a temporary, I think, day tradable bounce to the upside. Even if you pull up the Russell, the small caps had that magnificent rally on Friday. Look where it hit. This is your head and shoulders pattern. So you have your big head over here, kind of this double top scenario, neckline retrace, major pivot, major pivot, major pivot, chop, rejection. You've now retraced right back to this neckline here, and you got rejected today. The Russell finished down minus 1.25%, as opposed to the S&P and the Qs actually finishing up on the session. If you look at the Dixie, I touched base with this with my members over the weekend, and basically the Dixie was likely going to get a bounce off this level. A couple reasons why. You're hitting a massive SR zone, a support resistance zone. What do I mean by that? Well, let's go through the chart really quickly. So you can see here the dollar had its big surge up to the top of this channel, got rejected. That's your first resistance point. Big sell-off, hit support. Now that's your first support zone. Big resistance points over here. You had a breakout. You had another retrace that became support over here. You had this massive, massive parabolic rise in the dollar when inflation was surging and interest rates were surging. And then you came back to this area and you came back inside the channel, got rejected at resistance, came back down to support, came back to resistance, came back down to support all around here, came back to resistance, just kissed that area. Then you had a big, big bearish breakdown in the dollar, and basically you never got a weekly confirmed close below this level, and you rallied back. So now the dollar has retraced right back to this zone where you had a rejection, you had a rejection, you had a rejection, you had a bounce, you had a breakout, you had a rejection. So this is a big, big level in the sand that the dollar should really start to look to continue higher from here, in my opinion. Now, where do I think the dollar can go? Well, if we simply draw this parallel channel, this is just a quick analysis. You can see that the dollar could have a chance to move all the way back to the high side of the channel, but this is a wide range red bar that's going to be very, very difficult for the dollar to get through. But I do think that there's a very, very strong chance that it could get through that area. This could also be shaping up. So what's interesting is, okay, if you look at the dollar here, this could arguably also be shaping up to be a weekly flag pattern. Okay, so as long as you hold above this support zone, this could be bullish consolidation on the dollar to move higher, which would likely mean inflation or some systemic crisis abroad would likely strengthen the dollar from the scenario. But again, when you look at the Qs, and the Qs have that long-term weekly flag pattern that is forming, but it has not completed yet. You're still kind of digesting this whole up move, and you really haven't taken out that all-time high. So this is still technically could be a little bit of a lower high in the making for the NASDAQ and the Qs and the S&P. So that'll be certainly interesting to watch to see if this eventually breaks out. I'm watching for a weekly close. Obviously, with the dollar catching a bounce, gold saw a little bit of a sell-off. If you look at gold on, say, the 4-hour chart intraday, could also imply that the dollar has more upside because you're forming this little bit of a head and shoulders. Left shoulder, head, right shoulder. You haven't triggered the neckline, but if you do get a close below that tomorrow, the downside target is the low 1900s, around 1927. I actually think gold has a chance. I've mapped it out to basically retrace back to this parallel channel, retracing to the breakout zone, and that would be the long entry, in my opinion, on the gold play. And I'm looking at some miners, individual miners as well. Let's move along to the yields. So it was interesting because small caps responded to the higher yields today. Let me just retype that. Whereas the Qs and the S&P really weren't phased by it. So the 10-year yield is hitting a big, big support level. If we look at the weekly chart, we all know that the 10-year yield is hitting this massive, massive resistance level, which actually got a weekly confirmed break above it. So now it's technically support. So you're hitting support, this upsloping trend line. But the fact that yields are still so overbought on the longer term time frames lead me to think that we could be potentially putting in a little bit of maybe a right shoulder here before the bigger break in yields comes down. And what could force yields lower? Well, perhaps more banks going under. We did have on Friday Citizens, another regional bank in the States, closed down because of substantial amount of loan losses. So watch yields closely because definitely with this week in terms of the economic data, and you have Powell speaking twice on Wednesday and Thursday, he could be moving. He could certainly influence yields to the high side, which would not surprise me at all. I would certainly think yields are going to continue a little bit of a bounce here, maybe to 4.7, maybe at the high here, 4.892. But if you get a daily close above this red bar breakdown, that's troublesome for the market because that means the yield's technical daily uptrend is likely going to resume, and it could start to see a bigger push to the high side, pushing us up to the 5.27. I'm still waiting for the 10-year yield to really get above the 2-year yield. So if you look at the 10 is sitting at 4.64. And then you look at the 2-year yield sitting at 4.91. So it's about a 30 basis point spread. The 2-year yield actually looks a little bit weaker than the 10-year yield, which in the hiking cycle and nearing the end of the hiking cycle, that's typically what happens when the short end of the curve, the 2-year, starts to get weaker than the long end of the curve. So pay attention to that. Everyone is looking at silver, so let's just take a look at silver here. Silver's potentially putting in a little bit of an inverse head and shoulders pattern as well. Hasn't broken out yet, but this right shoulder is forming quite nicely. I would like to see one more dip on silver, maybe to the low end. You could potentially place silver on the long side if it retraces to the low end of the range, call it 22.40, and just keeping a very, very tight stop loss, because if it loses this consolidation, then silver could actually retest the low 20.47 level. So lots to consider on silver, but once it starts to get moving, it really does have a tendency to overshoot both to the upside and the downside. So right now, there's no real touch because you're kind of in between this wedge. Notice how you have your low range, your high range. Basically, I think a short into this area should be decent resistance, but with this consolidation, it's not the most optimal setup. And if you get a retrace all the way down to the lower boundary range, that is definitely your buy. Crypto, let's speak about crypto, because you have Bitcoin still holding most of its gains, but you have really the old coins running. I just started accumulating a short with some of my members today on Bitcoin, just inching into a position on the short side. Why? Really? Because this isn't some sort of bullish consolidation. Bullish consolidation should happen lower, starting to get a little bit of your first negative divergence on the daily chart. And I think if altcoins continue to run, some money might flow out of Bitcoin into the altcoins just to prop them up, since they are running a little bit more. If you look on the weekly chart, again, we're hit that 382 retrace, which was at 35,942 in a very extended fashion. You have 1, 2, 3, 4 weeks of upside, and basically you are hitting some pretty decent resistance. On the daily chart, where do I think we could get a pullback to? Well, I think you have support, minor support at 33, and then your bigger levels back to this breakout zone at 31. That's kind of where I'm expecting Bitcoin to retrace back to, is this 31,000 level, which would be a nice 9.5% decline from here. And we'll just have to really pay attention to that closely. Again, it's interesting to see that Bitcoin holding strong and had that very similar move. Same thing with gold. Gold had that big boom, surge higher, consolidating, and now it's looking a little bit toppy, trying to break down. So we'll see if the correlation between gold and Bitcoin with this recent move starts to play out as well. On that note, I'm going to end this video here. Thank you all for tuning in. Please give this video a big like down below. Definitely check out my website at tradingcapital.ca, where we have been posting a tremendous amount of wins lately. And definitely stay tuned for more trade alerts and updates, because this market's going to certainly hit an inflection point here that's going to provide a lot of trade setups, both on the long and the short side. Take care, everybody. We'll see you on the charts a bit later.